What is going on, YouTube family? Welcome back to another episode of Nasdaq 100 weekly highs, weekly lows, technical analysis video. I hope you guys have had an amazing week with your trades. Week just gone. Recap as to some of the moves that you could have taken last week during the trades based on the analysis that I did week previously, as well as some of the moves, things that we want to look out for this coming week, which would be week commencing Monday the 16th of September. All right, so with all of that said and done, we're going to get straight into the business of the day. And also as well, make sure you hit the subscribe button, turn on the notification, and drop us a like. Do all the cool things that definitely will help the channel grow, reach more people. And I believe that the content I'm going to be sharing with you, you're going to find super useful. So it's going to be a win-win all the way around, right? So without nothing more to say or to do, we're just going to get straight into the business of what market did last week. Okay, so what we could have done to improve our probability of making as much profit as possible, as well as what we could do for week commencing Monday the 16th. Now, it is important that you guys do the homework as well. Just don't blindly follow what it is that I'm telling you, because like I always say, I am not a financial advisor and I'm not giving you financial advice. I have a pretty good idea as to how to navigate the market, but with that said, not in any way, shape, or form will I ever consider myself to be an expert, right? So it's important that you take these things on board and you do your own homework and your own research. And I like to help you with that process of doing your homework and research by using my analysis and compare that with your analysis to make sure that everything I'm telling you makes absolute sense before you commit your hard-earned capital to any trades. Okay, so with that all said and done, we're going to jump into an hour, because at the moment we're on a 4-hour time frame. So we're going to jump into an hour. That is my favorite view to look at everything, believe it or not, because I get to view the direction of the day as well as I also have the view on a lower scale as well. So I'm actually able to see a lot more by viewing the hour chart opposing to viewing the daily chart. But however, you should be able to navigate all of the hours or the minutes, just to make sure that everything is making sense, right? So what has been taking place in the market so far? So what we can see, right, is that obviously we had a descending channel that I thought was going to go up. I talked about that in my previous video. It didn't go up, it came back down, but now it looks like it's going back up again. But this whole area over here is super interesting, right? And I want to talk a little bit about that, because this will help us in future, especially when these types of shapes appear again, so we know what to do and how to do it, right? Especially in this area. This one here was super easy to navigate if you were able to keep an eye on certain things. It was relatively quite straightforward to navigate this whole situation, right? But however, this is why you're watching this channel, so I'm going to do my utmost to try to explain to you how I saw things, and then you can then use that in future to help you navigate the markets also, right? Okay, so let's get into the business of the day, right? So there was a couple of trend lines that I actually removed off the board, but I'm going to bring back into it because I think the argument I'm going to make today is going to be relevant, and you guys might want to hear what I have to say on that. So I'm just going to bring this back, right? So then just get the trend lines that I did. And it's going to be slightly different to what it was before, and I'll say I'll draw it to about this level over here, and then let's just down to the low of the Friday, and let me just push this back a bit. Okay, right. All right, so what we have here with this trend line that I've just drawn out, the previous week how I did it, it came up to about this level right here. So it was like this, right? It was like this, and all of this was just doing that. Then we had that break all the way down on the Friday. But for the sake of this video, because the structure has changed, so we kind of need to bear that in mind. So this is how the trend line now basically looks, right? And also as well, I also want to point out this key area over here as well that we need to keep an eye out on, sorry. And that was the previous weekly high of last week of 19642.5. Now this number may be a slightly different from the number that I had in my previous video, just because once I had moved off of this and I was on another chart doing the navigations on that, or doing the charting on that, a lot of the stuff I did basically I didn't save, so it came off the screen, so I kind of had to put everything back again. So this number might not be precise, but it's going to be round about in the same area because we're using the high that was set on the Monday. It's the same goes for the one down here as well, right? Same goes for the one down here as well. So we just call it a zone, but I had to just re-put everything there, so hopefully that makes a bit of sense for you guys. So what we're going to do is we're going to keep this weekly high there as it should be, right? And we're going to get rid of these little levels for now, because it's an area that I want you guys to pay attention to, right, moving forward, especially for next week, Monday the 16th, right? And just to see if anything happens there or not. Something might happen, something might not happen, but we'll find out next week. So I'm just going to draw a little level across here, and that's going to be the resistance zone that was set. Okay, because at the moment, like I said in the previous video, this is a descending channel that normally gives a high probability of pushing upwards, right? And according to what I have drawn so far using the current highs of the last previous weeks, okay, it looks like price has broken out of that channel and is on its way up. But however, it hasn't taken out a key level, and that will be this level right here. Let me put this back again. That will be this level right here. So we're just going to call this zone 19619.9, right? It has not taken out this zone, and we need price to close above that, right? Reason being is that it will give us a good idea to say that price is basically coming out of this channel and is pushing upwards. So if I minimize this now, let me go into a day for this. Right, let's go into a day. Because with this channel, it could actually help us determine how high price could go. Right? Okay, cool. This looks cool. So let's come back into the hour. Okay. Okay, so what I'm now going to do is we have another weekly high up here, and let's just say that things go how I think it's going to go. Let me nope, I don't want that. Okay. So we've just extended this line all across the board, right? I would say if price knocks out this level right here, this zone right here, so we get a close above the weekly high that would have been set on the Tuesday the 3rd of September, okay, there is a high probability that we can expect price to find its way up here. Okay, it closes above this level, price is going to head up somewhere in this zone, and the price point for that is 21709.6, right? So this would be the zone that I would expect price to go to if it clears this weekly high over here, right? That's just my opinion on that. Once again, I always recommend you guys do the homework. I always recommend you double check everything that I am telling you, because once again, I am not a financial advisor. I'm not giving you financial advice. This is purely my personal view based on where I think market is going to go, right? It's important I say that to you. So we have an idea as to where price could go, because it looks like it's coming out of the zone. It looks like it's coming out of the zone. It hasn't come out of it completely, right? It hasn't come out of it completely. This whole situation over here could be an okie doke, right? So it might not have any intention of closing above this level over here, and it will just push back down again, at which point I would then need to rejig this whole structure just to make sure that it fits in properly with where I think market is going to go. But this is just a little gem that I thought I'd drop to you guys if you haven't noticed this zone already. So this is where price is right now. This is the zone right here on Monday. If we get a close above this level, it is fair to assume that you can kind of say, hey, maybe, you know, maybe price is gonna do this, maybe price is gonna do that. I know what I would be doing if I was trading the NAS. I'm not trading the NAS, I'm doing gold. Gold has been treating me very, very, very well, and I just love trading gold. Gold is just my thing right now, right? But however, NAS is an asset that I'm not going to say don't do NAS, because NAS is very, very, very profitable, right? If you know what it is you're doing, and hence why I'm here to help you with that process, okay? So we've gotten that done now, right? So we know what to look out for, the key levels we need to look out for in case price pushes up, and the profits in there for us is actually quite healthy. So for example, let me just let you know what you're looking at in terms of if we do get things in the way that we want, right? So we're looking at 20,000 pips. 20,000 pips. Like, I know some of you can do a lot with 20,000 pips, right? We all know you can do a lot, especially you guys over there with the deep pockets. As I like to say, the deep pockets, right? I can imagine 25 lots all the way to the upside. You know what I mean? Insanity. But that's the kind of situations that we like and love. So with all of that out the window, in terms of where I think price is going to go based on everything we see right now, let's assess what took place last week to help us understand the probability that price will be going to that zone. Because at the moment, we don't know, right? So we have to bear that in mind. Okay, so as it stands, this is what took place last week just gone, and that would have been Monday the 9th of September. So we had a new weekly low that was set for us in the early hours. Let me make sure this is right. Actually, no, we have a new weekly low that was... Okay, so this weekly low is actually supposed to be down here, right? Because that's where it closed on a Friday. And then the new weekly low that we got, that was set on the Monday of the 9th, was over here. So this is the new weekly low. So that's the new weekly low over here, right? Let's put a label on that. Okay, and the new weekly high that we had was set for us on a Friday. So last week, market just basically went in one direction, which was up, which is fantastic, okay? Hence why so many people love NAS, hence why I love NAS as well, right? Because usually it just does one swing from one location to another in a 5-day period. So you have 5 days of it just going straight down, 5 days of it going straight up. Hence why so many people loves it, because it's just super easy to trade. It's one of the easiest assets to trade, that and the S&P 500. Right, so if you're new, you should be focusing on those two. And if you're new and you're doing currencies, then I'll say currencies is going to slap you around the place, right? But the experience that you're going to gain from trading currencies, I promise you, is going to make every single asset feel like a walk in the park, if you can handle currencies, right? Because currencies is the absolute hardest asset to trade, right? There is no asset harder than trading currencies, right? Then after that, then you have gold and silver, which is also extremely difficult. But like I say, I don't like easy, I like hard, because if you train in hard mode, it's very easy to make dough on the standard stuff like NAS, S&P 500, stuff like that. It's relatively easy to navigate those with no issues at all. But it just depends on how you feel. If you're someone that really likes challenges, then I'll say look at those assets to begin with first. Try a very, very small lot size just to gauge what it is that you're doing, and experiment with ideas that you have in regards to trading. Because believe it or not, when you are learning trading and you come on YouTube to learn from people like me and other people all over the place, right? Okay. What it is that you're basically learning is you're learning people that have used the standard trading model, which is resistance support, right? And then they've added on additional things as well to help them navigate. And at the end of it, they're sharing with you their own unique style. So on my channel right now, you're watching my own unique style. So this is a style that I have. It's not unique in the sense of I'm the only one doing this, but this is my unique style based on things that I have learned, things that I believe work for me, right? And I use that to navigate the market, and I'm getting more wins out of that than using the basic trading model, which is resistance, support, and using all of these indicators to help you with your trades. And the indicators are good, but you have to understand how you're using them, right? They're not there to kind of tell you what to do. They're just there to make sure, as a guide, to make sure if things are turning around, you can look at that and say, maybe this is not what's happening. Okay, so I recommend that you kind of want to learn how to trade naked, then you can add the indicators on top, right? Now I'm kind of going off on a rant, a bit of a rant now, but bottom line, we're going to get back to it. So let's just get straight back to it, because I've just gone on a little bit of a rant, and I can imagine you guys watching is like, you don't want to hear any of that, but some of you might want to hear that. So let's get into it. Okay, so we have the weekly high that was set on a Friday, right? So weekly high over here, weekly low over here. This whole situation here was last week. So you're new to trading. You want to know how to trade, okay? And you want to know how you could have made an entry into the market based on what you was looking, because by all metrics, price should have broken downwards based on what you were seeing here, right? Based on what you were seeing here. But however, price went up, right? Price went up. And I'll tell you how you can spot when market is going to start doing things that is that might kind of go against you, right? So this is what you was looking at. You're seeing all this stuff and you're like, cool, you're going to sell. You start selling, it comes all the way up, it knocks you out, and you're wondering what just happened. Did the broker screw you? The broker didn't screw you, but however, you should have been a little bit more patient. What do I mean by a little bit more patient? You should have said something like this, right, to yourself as you were trading. Based on this channel that I'm seeing over here, I'm going to sell. It looks like there's a high probability that I'm going to sell, and there's nothing wrong with that assessment. But what you should have done as well is you should have had a more pragmatic approach as to what market is going to do and how market is going to do that. What do I mean by that? Okay, so what you would do is you would look at the previous week. So whatever is taking place in this side of the market, okay, you don't look at this side of the market and make decisions based on that. You look to this side of the market to use to make decisions on this area. So for example, next week, I'm looking here to make decisions here, right? I am never making decisions in this area. I'm always using this to help me make decisions here. So in this area over here, okay, what you should have done is you should have said, okay, Friday, what was the high of the Friday? So the high of the Friday is this over here. This is your level of interest, okay? What was the low of the Friday? This level right here. That too is your level of interest, because it's a new week, right? If this level on the Friday gets taken out, okay, you hop on this one. That's it. If this Friday is taken out, you hop on this one. And when it confirms itself that, okay, it takes out Thursday's level, you know you're solid, right? Now, because of where it went, it didn't take out the weekly high and it stopped there on the Friday, right? You do not hold this position over the weekend. Why? Because it has not taken out a weekly high. It's created a lower weekly high. It's been in a trend of creating lower weekly highs, which basically means that there was a high probability on a Monday that we'll get a swing all the way back down again to create a new weekly low, right? Because remember, Monday, it went down. Monday again, it went up, right? Let's go here. Let's look over here. So Monday over here, it went all the way down, right? Up onto the Thursday, and then it came back up but did not close above the weekly high. So these little levels here are your guides, hence why I love them so much, weekly highs and weekly lows. It gives you a really good idea as to what's going on in the market. And although resistance and support is still very important in terms of how to use them to trade, right? What the market is doing is it's literally telling you a story that it has no plans of going up. It can go up, but it has no plans in going up. Why? Because it needs to knock out one of these weekly highs, and from what we can see, it's creating weekly lows, lower and lower and lower as it moves downwards, and it's just doing it non-stop. It's doing it non-stop. So in this situation right here, okay, we have a weekly high that's closed below the previous weekly high. We had a whole week where price went all the way up in that one direction, okay. You could have used this area over here to put in buys to ride it to the upside in hopes that it was going to knock out this weekly high. It did not knock out this weekly high. So on the Friday at 11, I'm in London right now, so it's 10 o'clock GMT. So 9 o'clock, I would have hopped out of my trade based on what I saw here and here, right? And I would have been like, okay, I'm going to wait till Monday to see what takes place on a Monday. And then from that location, I would then make decisions. That's just how I would have done it, right? So in this whole video that you just watched right now, you've just been given a gem as to how to navigate. You never, ever, ever make decisions in a blank area of market making moves. You always want to have a reference point. And in this case, the previous week is what you want to use as a reference point, right? So all of this side here is all covered. We're happy with what we discussed here. So let's just get rid of all of this stuff over here. Get rid of all of this stuff over here, right? Because we don't need any of that anymore. And let's just focus on the probability of what's going to take place next week. So key areas of interest of next week when market opens, right, is this. In my opinion, once again, not a financial advisor, and I'm not giving you financial advice. I'm just purely giving you my opinion as to where I think market is going to go. Now, first things first that we want to acknowledge right now is the structure of this thing right here. And like I say, this is a descending flag with a high probability of pushing to the upside, right? This normally does that. It sometimes breaks all the way down, as we've seen. We had this structure laid out before and it went all the way down. The structure has now been expanded, right, to accommodate all the highs and all the lows. But however, this has a high probability of pushing upwards than breaking downwards. It's important we acknowledge that because that takes us into the next thing that I'm about to discuss with you all, okay? So, reference point of the previous week, how we can use that to navigate the market. Well, we have a whole bunch of FVGs, bullish FVGs, under this current high right now, a whole bunch of them, right? So we need to make note of where they all are, every single one of them, right? So this is the first FVG that we got, this is the second FVG that we got, and this is the third FVG that we got, right? This is the third FVG that we got. So how you can play this game is entirely up to you. It does come with a level of risk, and I'm going to show that to you. If you're comfortable with that, fair play, go for it. If you're not comfortable with it, then wait for it to play out, okay? So ideally, a sensible approach in the market based on what I've shown you in this area right now is to say you're waiting for price to close above 19569.0. This is where you want price to close above. But some of you guys are greedy. You want to get price at a discounted rate. That I understand because I'm just like that too, right? So what we're going to do is we're going to keep it nice and simple. Nice and simple, depending on how much you got to play with and how you want to do it. And once again, not a financial advisor, right? I'm not a financial advisor. So if you do this and it goes wrong, it's your fault. It's not mine, right? It's your fault because you made a decision. So I'm going to show you right now what to do. Okay, so let's add some notes on here. Settings, text. Buy point. Let's see how it looks. Okay, it looks great. And then we're going to clone that. Clone. Okay. So these are all your potential levels, right? And let's have a look over here to see if there's any traps that we need to be aware of. Okay, so we have an FEG in this zone right here, so that's not good. That's not good. We have one that's already been tapped. Okay, so ideally, your stop needs to be down here, right? So let's go in here, settings, and let's put stop. Okay, let's make this red. Okay, so how it stands is this, right? If you want to catch price at a discount, there is a probability that price, because of where it closed on the Friday, tomorrow, Monday the 16th, price is going to start pushing downwards, right? Now, if it starts pushing downwards, right, bearing in mind that we are working off the assumption that price is going to push up, right? We are working off that assumption that price is going to push up and it's going to create a new higher low. These are the concepts that we're running off of, right? Okay, if it comes to this level, that's a lower low. The deal's bad. It's gone wrong. You've lost your dough. Whose fault is it? Let's say it all together. Your fault, right? So what you want to do is you can put pending order 1 over here, pending order number 2 over here, pending order 3 number here, and your stop loss for all 3 positions is down here, right? If you're comfortable with that level of risk, that's how I will set it up. Ultimately, if you're not comfortable with that level of risk, you wait for price to close above 19569.0. That's how I will do it, and your TP will be set at this level right here. Okay, so you can have multiple levels of TP, okay, but for these highs over here, I'll just use a trailing stop for them. In all fairness, I'll just use a trailing stop for them, right? Let's have a look here to see if there's any FVGs that can kind of mess up the party as price is moving upwards. We're not really going to focus too much on FVGs that prices have already tapped into. So we have an FVG over here. Prices have already tapped into that, right? So price has already tapped into that. I mean, that's this area over here, right? You can use that if you want. So as a matter of fact, let's just do it like this. Let's just do it like this. Let's do it like this. Let's clone this one here. Okay, because it could come in there. It could, right? So you have 4 entries, right? 4 entries. To keep your risk managed well, right, I will use the same lot size. So I wouldn't increase lot size or anything like that. I would just keep the same lot size. So if you're doing 1 lot, so it'd be 1 lot, 1 lot, 1 lot, 1 lot 4 times. And obviously 4 times the stop. That'll be that down here, your total risk in this position if it goes bad. Worst case scenario, price may come down to around this region, but it shouldn't go past this zone. If it goes past this zone, you might want to manually close out that position. But however, I would say keep it open until it hits a stop, because the stop is at a sensible location. Now, based on what I'm telling you here, does it mean that the stop will not get hit? No, it does not mean that. It means that it could hit that. There is a high probability it will not hit that, providing it's still going to go up, right? If it's not going to go up and it's coming down, you've lost, and all of it is your fault. None of it is my fault. This is a recommendation because I've done the work. I assume the risk, right? And this is some of the things that you got to take on board if you decide you're going to follow YouTubers, right? But bottom line is, this is how I will do it. If it makes sense to all of you, naturally, if you see price play out in this kind of way and you're able to kind of make that move, then by all means go for it and get paid. But like I say, I'm not a financial advisor. I'm not giving you financial advice. Everything is on you, right? So now that we've gotten that covered, that will be the move as to how I play next week. And if you want to keep it absolutely safe, you don't want to hold any reds, you don't want to lose anything, right? Then there's more sensible, logical way to navigate all of this is simply wait for price to close above the weekly high and lock in that position, right? Lock in that position and then see what it does and see what it does. That would be how I would do it. And once again, I am not a financial advisor. Everything you do here is all on you. All of it is all on you, right? Because it's important I say that, because some of you guys make terrible decisions. You turn around and say, oh yeah, pips and points on me. I didn't tell you anything. I'm just making a recommendation. Like it says in the description, this is purely for educational purposes only. Purely for educational purposes. So with all of that covered, my awesome people, right? If you want to get a better understanding as to how I do all the technical analysis, how I do what it is that I do, you should see a thumb about now on backtesting videos. There's 21 videos in total. You have to sit there, watch them all, and make sure it all makes sense, and then go back and practice them, and maybe you can add your own flavor to it as well, to make sure you have a really good understanding, grasp of what I'm basically sharing with you. And the second thumb that you're going to be seeing is going to be for the previous week's video that you can go and watch. This should bring you up to speed as to how we're kind of navigating the market, because the style that we're using is the same style week in, week out. We don't change it. It's the same thing. It's working for me, hence why I'm talking about it all the time, right? And that will kind of help you gauge your bearing as to what we did last week, what we're doing this week, and maybe what we're going to do for the following week. And because you're going to be a subscriber, you're kind of going to be getting in the flow of how we kind of do business and all of that cool stuff that we normally do, right? So I hope that this video has been super useful for all you guys watching, and I'll see you in the next one.